Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Friday, the EURUSD pair continued its upward movement. The 127% Fibonacci retracement level at 1.1712 proved relatively weak. However, a close above it still allows for the expectation for further growth toward the next level at 1.1802. A move back below 1712 will not be considered a strong sell signal. Bears continued to retreat from the market, while bulls maintained their offensive. The wave structure on the hourly chart remains simple and clear. The last completed downward wave broke the low of the previous wave, while the new upward wave surpassed the previous peak. Thus, the trend has once again turned bullish. The lack of progress in US-China and US-EU negotiations keeps bears hesitant. The FOMC meeting did not help the US dollar, and the Middle East conflict brought no benefit either. As expected, the bears trend did not prove strong or lasting. The news background on Friday was weak, offering no meaningful support to either bulls or bears. On the 4-hour chart, the pair has risen to 1.1680 level and consolidated above it, which allows for the expectation of further growth toward the next Fibonacci retracement level at 161% at 1.1851. A move back below 1680 would support the US currency and indicate a decline toward the lower boundary of the ascending price channel. No emergent divergences are currently observed on any indicators. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. By the end of Friday, the British pound slightly declined, thereby increasing the likelihood of the Marlin oscillator signal line returning to its ascending price channel on the daily chart. However, as long as this has not occurred, the upside potential remains sufficient to continue the upward movement toward the target level of 1.3834. This level also attracts the price due to the embedded price channel line passing through it. On the 4-hour chart, the corrective price decline allowed the Marlin oscillator to discharge and relieve tension ahead of the anticipated further growth under the main scenario. At the moment, Marlin remains in positive territory. To break the uptrend, the price must consolidate below the 1.3635 level. The MACD line is already approaching this level for additional support. That's all for today. See you online soon.